Well, for more on the global outlook and the local outlook for markets, Geoff Wood from Morphic Asset Management joins me live in the studio. Geoff, thanks very much for joining us. Let's actually talk about some of the data that's come out today. So to come back from overseas, the wage data in particular. I mean, it's still a fairly depressing picture, certainly for workers. Yep. But the RBA, has shown confidence that it will grow. Now, is this the sort of growth that they thought?
Yeah, so the market was surprised. We were looking for 2.2. It came in at around about 2%. But I don't think the RBA is going to be too worried about it. I mean, if you think about Australia, it's in this process of trying to find a new direction, a new area for growth. And part of that will naturally come with the economy sort of growing at a relatively slow rate from a wage perspective, pressure on the currency, and that allows the nation to become more competitive when you compare us to, say, our Asian peers. So this is all part of the roadmap, I think, that the RBA are looking for.
And I guess the dollar falling sort of helps that picture.
Correct. Yeah, that's a big help.
So just take us through exactly why you think, I mean, you're sounding quite confident, whereas many others think, look, this is not a great picture and it's not going to sort of change very quickly.
Well, it's quite interesting because yesterday we had the NAB Business Condition Survey and that made series highs, so multi-decade highs.
But there's this disconnect, isn't there, Geoff, between, because we've also had, that's come on the back of recent weak retail sales. The consumer sentiment out today is, the optimists are now outweighed by the pessimists. Yeah. So there is this kind of it is a kind of a dichotomy between business confidence, business conditions so strong and consumers not being brought along.
Yeah, so I mean, your average consumer, they're not getting a wage rise, and they've perhaps borrowed some money to buy a relatively expensive property market, and they're feeling somewhat conservative. Now, businesses, on the other hand, they're seeing great global growth, the currency is lower, we've got low interest rates, and the commodity market is supported. So it's a very good backdrop for businesses. And I think, although we've got these different pictures, if you weigh up which is the most important, that ultimately the growth is still strong enough to keep adding jobs. And at this rate, the unemployment rate is trending down quite nicely, and this time next year we'll probably be at 5%, which is nearly as low as we've been in the history of the economy, and the RBA should be getting more comfortable to hike. I mean, just to continue, I mean, if you look at the US, where also they don't have any wage rises and haven't had for many years, the Fed have been hiking for 2 years now. So you don't necessarily have to wait for that to start hiking. You need to be somewhat preemptive of it.
All right, but the RBA is going to wait, aren't they? Until they see a bit more strength in that wages story.
Yeah, I think they'd probably like to see unemployment get a little bit closer to 5%, which we'll just do over the first half of next year. And that should give the confidence to sort of slowly, like all the central bankers globally are doing, just slowly start hiking rates.
So do you feel then very convinced about the job story?
Yeah, I think there's enough momentum in it. What we've seen globally is once you get this momentum within an economy that you can create jobs, it tends to be quite a steady grind lower, and we're seeing a very similar dynamic in Australia.
All right, now what's going on with markets? Because, we've had this massive run up in the United States and some of the other overseas markets. We got a bit of joy and bounce in the last, 2 weeks? Yeah. And now we're back to below 6,000. I mean, are we back to a range? How do you see this?
It's a good question. I mean, I think one of the things that we've marvelled at is lately a lot of market participants are scratching their head going, why is the market selling off? Whereas when the market was rallying, there were less people saying, why is the market rallying? It's that sort of behavioural bias that people will cheer the market higher but question it when it falls.
Don't ask questions about why it's going and whether it's sustainable and that sort of thing.
So, I mean, Japan, which is a market we're overweight, we really like it. It rallied 20% in the space of about 5-6 weeks.
Did you get the benefit of that?
Yeah, we were involved in that, but we were surprised by the speed of it. Now, the market got as overbought as it has since 1986. And what you tend to find is it's just natural that you get some give back with inside a move like that.
Yeah, so in fact Japan's just coming off a bit too, isn't it? It was down, 5% last week?
Japan's definitely coming off. It's probably one of the most sort of sold markets at the moment. It could go a bit further. I mean, when you're in a stage like this, it's not fundamentals driving a market, it's the psychology of the market participants. Yeah. So what you tend to find is within bull market moves, you can give back like a third to a half of your rally, and then the guys that missed the first stage of the rally come in and support the market.
All right, the big news, really the only thing that a lot of people in the normal community, the wider community are talking about today is the yes vote, that Australia has voted in a majority for yes. How do you think this is going to impact? I mean, the markets appear to be perhaps taking no notice of it. Qantas shares have risen, but you know, the banks which also supported it and have embraced diversity, their shares aren't moving on the back of it. You know, how do you think this will play through?
I think the most interesting thing to do is look at this in terms of how does society evolve. Now, I was looking into Mardi Gras, which started in the late 1970s, ultimately as a protest movement against gay rights, etc. And here we are nearly 40 years
against trampling of gay rights.
Correct. And here we are 40 years later, society has changed its mind. So I think the most interesting thing for me is how long does it take society to change its mind on something that it deems that important? And it's an interesting timescale. It takes 40 years to come to that view, and now Australia has joined.
But just even on marriage equality, I mean, we've actually only been talking about that aspect of equal rights for 4 or 5 years, really, and so that's very quick turnaround.
Well, I think that's a sub-debate within the larger debate about rights. But you're right, that particular part of the debate has been a shorter time frame.
So will it have any immediate impact, do you think, on the business world?
I don't think your average investor will trade this. Like you say, Qantas is higher. You could maybe find some idiosyncratic stories that do well, but at a big level, this is just another nation coming to a similar conclusion to what many Europeans and the US citizens have, or governments.
Good for tourism?
It should be, yeah.
All right, Geoff Wood from Morphic Asset Management. Thanks so much for joining us.
Thanks, Helen.
Great to talk to you.
Cheers.